Let's review Chapter 4, Internal Control and Cash. Our learning objectives include number 1, we're going to describe fraud and its impact. Number 2, we're going to explain the objectives and components of internal control. Number 3, we're going to evaluate internal controls over cash receipts and cash payments. Number 4, we're going to prepare a bank reconciliation. And number 5, we're going to report cash on the balance sheet. Learning objective 4.1, describe fraud and its impact. So as the book is suggesting, fraud is intentional misrepresentation of facts. The key word is intentional, intent. If somebody makes a mistake, if somebody makes an error, whether it be on a banking document, whether you go and if you're working for somebody and you write something down that's incorrectly, or on your tax returns, if somebody makes an error, it is a misrepresentation, but it's unintentional. No, in most cases, people don't intend on making an error. But intentional means you're trying to distort something or deceive individuals or misrepresent the facts, just as it's presented there. The next bullet point is for the purpose of persuading another party to act in a certain way. So as it relates specifically to financial statement reporting, the management is sometimes motivated to present financial information in a way that makes them look better, that makes the company appear as if they're doing better than what they may be doing. And for that reason, if they intentionally misrepresent the facts or the numbers, then that would be considered fraud. Fraud also causes injury or damage. Well, as an example, if an investor receives financial information, reviews it, makes a judgment on that company and decides, I'm going to invest in this company, and later it's determined that the information was incorrect, intentionally, it misrepresented the facts. And as a result, if their investment in that company, if the value decreases, then they've had some injury or damage. It is a growing problem throughout the world with the expansion of e-commerce. The thought process is that with technology, we find that it's easier for the bad people to do things to misrepresent information. And some common examples of fraud include insurance fraud, check forgery, Medicare fraud, credit card fraud, and identity theft. In the context of what you might be dealing with, whether it be as an accountant or even a manager within an organization, the common types you might see and the way we discussed it, the way we describe it, or the terms that we like to use is misappropriation of assets. Misappropriation of assets. So what we're talking about is something that would be normally committed by employees, and usually it involves theft of money or inventory. It can involve also bribery and kickback schemes, and another common fraud that's committed by employees that is categorized as misappropriation of assets would be overstating expense reimbursements. If you're an employee and you're asked to travel on behalf of the company to take care of specific business, and when you return, you're reimbursed for your expenses, well, there's an example. If you fudge those numbers to make it appear as if you spent more money than you actually did, to be reimbursed for more money than you actually did, then your reimbursement would be overstated. That is considered misappropriation of assets, and that is a common type of fraud, especially within companies. The one that we like to focus in on here as well is fraudulent financial reporting, committed by managers, false and misleading journal entries, and the intent is to deceive investors and creditors. make the company look better than what it really does, so that creditors will be more apt to loan or renew loans, and an investor is more likely to invest in the organization. A popular graphic used when discussing fraud is what is referred to as the fraud triangle. And at the top, what's listed at the top of the triangle is motive. So this would be is something that is inherent with every business, that you're going to have some employees that may be motivated to commit fraud. They also can easily rationalize it. So in other words, they believe that others do it, as an example. Well, everybody else does it, so why shouldn't I do it? And then opportunity. Opportunity is, if it presents itself, if the opportunity is there, then employees might take advantage of it. Now, you as managers in the future, you probably won't have too much control over motivation. And the reason being I say that is, everybody goes through rough times in their lives. Everybody has some hardships. And under certain circumstances, all of us may be motivated to do things that we may not normally do, but because we're faced with extraordinary circumstances. And the thing I can think about, the circumstance or the situation I can think about, is that if your children are sick, if your children are in danger, and what you perceive to be the only solution to help your child is to either borrow or take some money from the company with the intent of paying it back, well, still, without authorization, that's still theft. And so they'll do that because they're motivated, because they want, I think of the movie with Denzel Washington. It was John Q, where he has a child who needs, I believe it's a heart transplant, and the hospital is refusing to do it because the insurance company won't pay for it. And so John Q takes it, is motivated, and takes the entire operating area under hostage and forces, I think he used a gun, and forces the doctors to conduct the operation and to save his son's life. Now, by the end of the movie, everybody was trying to save the little boy. Everybody was trying to help. But nevertheless, you really, often I use that in the classroom, is does that justify what he did? Because his intent was to save his son. And most of us might be inclined to do something very similar to that. Because, when we see no options and we see no choices, desperate times call for desperate measures, so to speak. So most of us might be inclined to do something. And at the same time, we're very sympathetic, which is why that movie did reasonably well. People like to see, they'll look at somebody like Denzel Washington in this case and think of him as maybe a hero because he did everything he could to save his child's life. But what we sometimes miss is, and it's not really even brought into the movie itself, is the impact on the employees when they see somebody come in with a gun that requires them to do or forces them to do certain things. You miss the impact of the fear that they may be having. You miss the fear of the family that's at home when they find out that their husband, their mother, their father, their son, their daughter is being held hostage in a hospital by what appears to be a gunman. And, they likely won't know all the circumstances. They won't know the details. So they're going to be concerned, rightfully so. They're concerned about their family members. And so that is de-emphasized in a movie because it makes it so that it's not so clear if it was the right thing to do. And so the point being, okay, so going back to the triangle, motive is something that most of us can feel at some point in time in our lives, given the circumstances that we're facing. Rationalization, that also happens very frequently. In fact, most of us judge our behaviors based upon others. Well, yeah, I might have taken $10 away from the register, but those guys are taking $30, so I'm way better. So you rationalize it saying, look, if I'm better than they, but even though what you're doing is still wrong, illegal, misappropriation of funds, whatever it may be. If it's fraud, it's fraud. But we rationalize it because we look at what others are doing and decide. The other thing we often do is that if we feel we've been wronged by the company, so let's say we had a review about 6 months ago and you were expecting a raise and the company didn't give you a raise, right? So you might rationalize it saying, hey, well, if I get away with this, I'm going to submit a reimbursement form for higher than expected expenses because they should have gave me a raise anyway. I shouldn't have to be doing this. If they would have given me my raise, I wouldn't have to do this. So we rationalize it based upon the circumstances as well. Now, managers have less control over motive and rationalization. But what managers do have a lot of control over, and that's what we're going to be focused on in this chapter, is opportunity. In fact, many cases, even though management is maybe looked upon as being controlling or distrusting, or they distrust their employees, in fact, in many cases, management taking certain steps to ensure that we remove opportunities from our employees, we're actually doing favors for our employees. And the reason why is because if we're motivated and if we rationalize it, we might do something. So it's up to management to remove that opportunity, or at least minimize the risk of the opportunity, reduce the chances that you'll have that opportunity. And so therefore you're less likely to commit fraud.